following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. It is better to believe than disbelieve, and in doing so, you bring everything to the realm of possibility. Albert Einstein. Market-wise, let's take a look at it out here. We have the Dow up 44, NASDAQ up 22, S&P's up 7, gold contract down $6.20, trading at $1,090 an ounce. Silver down 6 cents at $13.80 an ounce. Platinum down $6.60 at $8.37 an ounce. Copper down a penny and a half at $1.95 a pound. Light sweet crude down 77 cents, $30.63. Light sweet crude broke the $30 barrier today, folks. Jumped right back up above it. We'll talk about that in a second. Bonds, the 10-year up 15 ticks, 127.27. 30 up a point and 26 ticks, 157.19. King dollar up 251 ticks, 99.03. The euro is trading at 108, and the yen is trading at 117.60. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. I'm telling you, folks, it's about as good as you get. You know, we get 3 to 4 o'clock. The S&Ps right now are up 550. Guess what? Watching this market is going to be so wild in the next hour, and this is why. If we take a look at the S&Ps, what you're going to see is this. The S&Ps opened up huge. Dow is up almost 200 points. Gives it all back. Let's go take a look at this and what you have. When I cut to the chase, folks, the bottom line is that this market's going to try to make a run back to the highs, which is just an absolute mind blower because the spread out here today is a 41-point S&P spread. But let me show you what the market thus far has done. So you pop higher on the open. In a dramatic way, too, by the way, okay? We get up to 1940 in the S&Ps. Well, as the S&Ps came back down, we got down to, 1905. That was at 2:20 this afternoon. What that was doing, folks, was going into the sign of strength that we had off the lows yesterday, off the bottom. Now, I'm going to go through this with the futures chart. I'm going through this. Well, it's a 10-minute futures chart, so you can see the correlations, how they work. At 3:20 yesterday, the S&P mini futures went from 1899 to 1914. We did that. The first bar, we did that with 75,000 contracts. Second bar, which we got to 1922, we did it with 95,000 contracts. Now watch this. As we back down, and this was so cool because what was happening is that at 1400 hours, 2 o'clock, that's when oil broke the $30 mark. The E-minis did 49,000 contracts. Now, 49,000 contracts, folks, is light volume. 49,000 was going into 75,000 and going into 95,000. What do? That gets the E-minis down to 1907, not the low. 2 more bars down, we get down to the 1905. You do 42,000 contracts, still going into 75,000. So you went into the strength. It rejected it. It has lighter volume. Now, this is the kicker. This is when we were up this morning at 0940, and this is why it has a chance to go all the way back there, which would just be amazing coming into the close, is that 1940 has 96,000 contracts. So that's going to get tested. The kicker here, though, is they can get tested today, which is going to be so cool watching this thing shake out. We go over to the NQs. What do we have with the NQs? This is what you have with the NQs. NQs out here, same type of setup. We bring this back 2 days, and what you're going to see is that the NQs, the sign of strength yesterday from 15, 20 hours was when the NQs came off the low at 442.28. Went from 42.28 to 42.73. You did that with 12,000 contracts. You accelerated higher to 42.90, and you did that with 16,000. So we went from 12,000, oh my God, to 16,000. So watch what we did when we backed down. When we backed down at 220, you backed down with 9,000 contracts and 7,300 contracts. And what you also still have is at the highs up here, at the 43.37, you have some good volume up here. So this is going to be wild watching this whole thing come into the close out here today. One of the Tigers wants to look at the TLT. The TLT is the 20-year bond fund. Now, this is going to be really intriguing because the 10 and 30-year moved higher. Okay, I'll do the TLT first. The TLT failed. It failed on price and volume, and this is going to be wild watching this baby shake out, and this is why. You had the spike on the December 11th. December 11th, you go up, you hit a price point of 124.10. We do 12.3 million shares. Now, prior to that, and this is what you want to watch this because actually the TLT I'm going to bring all the way back to the highs. So the TLT, the high that was generated in the TLT goes back to August 24th. 128.92 is the high, 125.82 is the low. You did 16 million there. You spike into that, and you spike into that on the October 2nd. We do it 13 million. When we went down after the first spike, you come down with 15 million. You come down with 15 million. Okay? Bottom line, TLT goes from 126 down to a price point of 118. You go higher again, you get into 123.04. You have 7 million. You come back down at 16 million. Now here's what we've done today, and this is really wild. You spiked higher on the 11th of December, 12.3 million. Today we've done 8.4. You've already got over the high. If this can't close over 124.10, that would be a failure on price, failure on volume. Now let's go over to the 10-year. We take a look at the 10-year because there's no doubt that the bond surged higher. This 10-year, however, right now we're at 127.27. You're coming into the downdraft from the 28th, and you're coming in there with lighter volume. So we'll see how this whole bond market shakes out, but thus far, inside the TLT, that it would be a failure. And I suspect what would end up happening, if in fact this bounce comes in and this bounce goes, that's when you'll see this back down once again. Dow Industrials right now are up 30, Nasdaq's up 17, S&Ps are up 4.5. You have gold down 580. They couldn't whack gold, tried it all day long, couldn't handle it. Silver down 6 cents. Light sweet crude, $30.53. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 50, Nasdaq's up 21, S&Ps are up 8. Let's go take a look at that oil contract. So, oil, folks, the ABC structure on the way down, $28.25. That was the price projection. That is the price projection. We've hit 29.93 here today, and it looks like we're still going to have the volume, too. You get 560,000 contracts thus far. Yesterday had 649. So this baby can get lower. That's the bottom line. What's cool, okay, is that you want to remember something. The more times that you actually test, when we just went through that testing procedure for the NASDAQ and the S&Ps, the more times that you test and that you fail, the probability goes much higher that you're not only going to go the opposite way, you go the opposite way a little bit more than you think you're going to go. And what it is this. Picture it just whether you're working out or you're doing something else. The more repetition that you do, let's picture this. Let's picture first you're trying to break a wall. You're trying to break. What ends up happening? You get tired. The market does the same thing, folks. What the market has been trying to do, and particularly because day after day after day, this is like the third day, that is a really cool situation to get a bounce going in a pretty good way. That's what I suspect that we have done here. And particularly, it's just the opposite. So watch how this goes. It's just the opposite of opening down and you're moving up versus opening up. You move down, but you're moving down into a sign of strength, and then you pop and go the other way again. Okay? So it's going to be wild watching this whole thing shake out. Now, putting that together with the aspect that oil was breaking down right at the 2 o'clock mark, it was really about as cool as you can get as you come into a sign of strength. You know, because there has to be what? There has to be sellers in order to go lower. There has to be buyers in order to go higher and stick on price. That's the kicker on this, folks, okay? If you don't stick on price and, you know, you have either the lighter or heavier volume, guess what? It's going to spin the other way. Let's go over to the gold market, because the gold market, okay. So what is gold done out here? Gold got to a price point today of 1083. You're at 1089 right now. It was coming into 192,000 contracts, and we've done 157,000. Now, 1091. Okay, we'll see how they. So you back down with light volume, and you still could have an ABC structure on the way up. Silver needs help. Silver needs some real help, man. What has happened with silver out here today, though, is this. Silver has really light volume, so they're having a hard time finding sellers at these lower prices. Bottom line, silver needs another sign of strength. What had happened out here today, let's go look at SLW, because there was only 2 silver stocks that looked any good. We'll see. But Silver Wheaton, this thing got smacked pretty good. Now, it got down to 1088, and it did hold the bottom, but the volume, man, is pretty intense. Pan American Silver, PAAS, let's see what's going on here. Yeah, that held the bottom, too. Silver's a tricky one right now. If our man Larry Pesavento, he was talking about, actually, this is pretty cool, actually. PAAS is pretty cool. So, and let me just skip a beat here, folks. I'll go right back to Larry in a second. So PAAS, Pan American Silver, what this actually did is come into how it came off the bottom on August 10th, which is $5.94. You had 4.7 million and you did 2.3. This is all right, man. This is intense. So what Larry had been saying yesterday morning, folks, was what is holding gold back is silver, and there's no doubt. If silver moves, man, you are going to see those markets move, and you're going to see the velocity is going to be pretty intense. King Dollar. Let's go take a look at King Dollar. Good old King Dollar. I can't get out of its own way. King Dollar is going to, it's been consolidating since the December 4th area. December 4th is where it got smoked. December 3rd, rather? Yeah, December 3rd. December 3rd is where it got smoked. The index came down from 100.70 to 97.70. Monster move, huge volume, all of the above. It's been having a hard time staying over 99.34. And what that sets up, number one, I suspect we're going to test the lower consolidation area, which is 97.22. And I expect we're going to actually get down to this 94.05 area. Some of the higher volume stocks in this market right now, we get Freeport-McMoRan down 22 cents. You get Williams Company off 199, off $2, man. That's a big hit. Let's go over and take a look at that thing. So I believe this is a pipeline. WMB, Energy Infrastructure Company focused on connecting yeah, it's a pipeline. Okay, they operate mainstream interstate natural gas pipelines. The low is $15.19. That's today. The high is $61.38. Bring this back. Wow, you talk about 100% move. Man, this is quick. Okay, so bringing it back 10 years. Yeah, don't touch this, baby. So we've hit $15.19. $10, man, this can get to $10. That's pretty intense. No doubt, pretty intense. Okay, so now let's go back to the S&Ps for a second. So when we went through the S&Ps and the NASDAQ at the beginning of the hour, showing the testing procedure, what you want to see now is that the rally cap is on. So when you're looking at this, you got to remember that we have that high volume spike at 1940, and this would be really crazy, folks. It goes up, but the correlation, we got the correlation. So now what you want to see is this. I'll be able to do this right here, actually. Okay, so the little tiny swing that we're taking out here had 31,000 contracts. Yeah, we blew it away. So, okay, so watch this. At 12 noon, you spiked to 1924. We had 31,000 contracts. Well, guess what? That last bar took it out with 43,000. Now, what does that do? That brings the probability higher that we're going to get up to. Now, watch how this works. The bar that we're at right now, the low of 1936, The low of that is 1928. Now, we're going into that bar right now. Let me see how many minutes we got. That's at 6 minutes, okay? So we're going into that with good volume. The further that we get into 1928, let's say that you get into it by 1931, because at 1936, the top of it, see ya, don't want to be ya. That thing will spike right up to the 1936, and then it's going to have game on to the 1940. Now that you would not want to expect higher price than that, because that is a 100% move of a move. What that will do, however, okay, is that would generate higher prices coming into the market tomorrow. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. We have the Dow Industrials up 115, NASDAQ up 41, S&P's up 1550. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at the SPY, and we'll put this just up on a daily basis. So the next thing that you're going to be looking for out here, folks, is that inside this rally, bottom line, what I expect you're going to see, you're going to move higher. We're 193 right now. You can just take the lows of the 16th of November, which is 202.18. The low of December 14, which is 199.95. When you get rejections of lower price, that's what they like to do, okay? They like to go to the tops of the lows. Now, This rally today is going to be on lighter volume. What you're going to be looking for is each day as we climb up into this downdraft. The downdraft I'm talking about is December 18th. You climb up into those levels and you get up there with lighter volume. That is a little sweet setup for a monster ABC down. That ABC down would take you into the August 24th swing low. So we'll see how this baby shakes out, but that's how it seems to be setting up at this particular point. What would negate that, the only thing that can negate the probability of it is that you would get an expansion of volume on the way up. The NDX 100 is doing the exact same thing. You're up today on 39 million. The NDX, or the QQQ, is trading at 105.32. That thing can bounce like the 109.38. So it's going to be wild watching this whole thing shake out. If we go over to the oil sector, what you have is this, ExxonMobil. Now this is going to get interesting here on ExxonMobil for you folks that may want to trade some stocks here, and this is what it is. So Exxon yesterday got into 72.56. We did 21 million shares. You were coming into 34 million. You were coming at the highs of the lows, those 3 days. And you're at 16 million today. Let me just see this thing. This is interesting. Okay, so check this out. You're at 16 million today, and when we just got that nice little rally just then, Exxon, on a short-term basis, is set up. It just took out its swing point from 940 this morning with volume. So that sets up, let's see, 74.94. That sets up about another $1.50. So that's 76.50. Yeah, that would make sense. So that sets up about a run to 76.50. 76.50 is where it traded at 15.50, 10 minutes to 4 on the 7th. That's how that's set up right now. You know, what happens is that when you have fast markets like this, folks, this is when, whether it's a Fibonacci expansion, contraction, these numbers, they come to fruition much quicker. And the main reason is that they come much quicker is that the controls of the market, the rails are off the market. That's what ends up happening. When the rails are off the market, what I've always found is that the actual expansion, contraction, and Fibonacci basically is more consistent. That's just, they hit quicker, they do all of the above because the machines can work as fast as they can, but guess what? Markets are very, very quick. We go over and we take a look at the, let's go take a look at the 30-year bond, because the 30-year must be really close to the highs. Okay, so the 30-year, yeah, check this out, man. The 30-year has done 334,000 contracts. The last swing high was 157.17. It took that out. The closing high is 157.10. That was on the spike high. This is going to be pretty wild. You know, we could have a big closing high on this baby today. So that 30-year probably still going to spike that 158 again. That's what it looks like. It should have been able to stay over the 157.17, and it hasn't been able to do that. You know, we'll see what how that shakes out in the next half hour, because what does happen is that as markets charge forward like this, particularly if you know the volatility out here today has been as cool as you can get, that spins the bond market also. You know, because when you talk about price spread inside the markets out here today, you've had some really nice price spread. We had highs that were established. The first high was out there in 1920. Then you had a low established of 1899. You went up to an additional high of 1940. You went back down to a low of 1906. And now this baby is getting ready to make a run back to that 1940 area. And it looks like it's going to have the juice. The reason I'm saying that is that the spike on that last 10-minute when the S&Ps went from 25 to 31. You're just going sideways right now, hanging right underneath it. And the longer it hangs under this 1931, the more probability is that as you come into the close, you're going to see some juice, which, by the way, that would be really unusual, and this is why. So watch how this shakes out, folks. Now, this is where you got to get a few cycles, basically, under your belt to see how these different markets trade. See, what normally would happen is that the market went up and was up good. So as the market's up good like that, many times people are buying up there, and that as the market went down, what would end up happening is that they're trying to sell just to get their money back. Now, that being said, guess what? In a market like this, will this happen because it's happened so many times? Bottom line, I suspect most traders were waiting to see that, okay, we're going to get another pullback. I'm going to wait for that pullback. I'm going to buy the pullback and then jam the market. And if, in fact, we go up to that 1940 coming into the close, that's how the larger trading community, investment community, whatever it is, that's how that played out. Because that is saying that you don't have people trapped at the highs. You know, I'm talking about short-term people, not long-term people. Long-term people, unfortunately, are at highs. I'm talking about short-term people. They wait. You hit it, you whack it, bang. There you go top side. Let's go take a look at some of the Dow stocks out here. You have American Express up 22 cents. Exxon's up 148. Caterpillar's flat. You got Disney up 154. There's a dog, Disney. Honeywell is up 78. You get Big Blue down 30. Walmart is down 61. Let's go take a look at Walmart for a second. The key to get your head wrapped around here, too, folks, is that if you're a long-term investor, get some thought process going into are you going to put stops in? You know, just get it going. Because what I've found is that the market gives you multiple times to get out of the market. What you don't want to be is sitting around here 3 or 4 months from now when these markets, I suspect, a lot lower, and saying, why didn't I get out? Because, you know, when you pull this back, why didn't I just put a stop in? That's my point. You know, when you pull this back, we're trading where we were in May of 2014 right now. But yet, guess what? You're still at wicked highs, man. You know, the high is 213 on the SPY, you're at 193. So it's not the end of the world. All this volume's downtown, man. We're going downtown. You know, this is like a, you know, you get a nice bounce going, take advantage of it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow's up 105. NASDAQ's up 41. S&Ps are up 14. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow is up 84, Nasdaq's up 36, S&Ps are up 13. Let's go take a look at what we had happen overseas. So last night overseas, folks, the Nikkei had been closed the last couple of days. That opened up. That was down 3%. Shanghai was flat. Shanghai was up 0.2%. Taiwan was down at 3% also. In Europe today, you had the FTSE up 0.9%. The DAX was up 1.6. Let's go take a look at that DAX right now and see where that baby stood coming into the close. So the DAX, yeah, I would say this held price. The DAX got to a price point today of 10,092, closed at 9,985. I don't get the volume till a little bit later. It's going to need more oomph than that, but bottom line, that's a start for a bounce. That's what it comes down to. The FTSE also got a start. The FTSE was up 57 at 59.29. Now, both the DAX and the FTSE are also coming into the August 24th as well as the October 2nd levels. Those levels are important, folks, because the October, you had, of course, the August 24th level. The October 2nd level was testing that. Now what we've done, we've come down and tested that level, and we've done it with lighter volume. And so the procedure of how you get into a test is also important. And in this particular one, what you had is that it was a straight line move. When you get a straight line move like this, it's really hard to go break a big high volume day. You know, the S&P on the 29th of December was out there at the 207.79. Bottom line, 7 days straight down. Well, you were coming into a sign of strength, which had 211 million. That was on October 2nd. And then you were coming into the 507. So, you know, bottom line, you can expect that the volume would dry up. And what does that mean? That means you get a build cause. And the cool thing about building cause is you bounce at lighter volume, you get action. You take this and put this on a longer-term basis, what you're going to see is that each and every high in this S&P has nothing. This has been distribution. This is the most dangerous part of this market right here. This has been in distribution. I can make a case this has been in distribution since July of 2014. That's pretty intense, folks, because this is what you had happen. If you go back and look at any market, the first time that we came down with some real juice was October of 2014. So that whole time it's going sideways on a weekly basis from July all the way to October, comes down heavily. And goes higher again, no volume again, but you're going to see every dip had big volume. You know, my take is that, you know, we'll find out if we're in the markdown period now. What happens with the markdown period is that you build cause to blow away those lower prices. But the reason I expect that we are is that the transports were, you know, screaming that not only that it wants to go lower, it broke lower with volume. You're way under. The August 24th level in the transports, folks, is 7,400. We're at 6,900. You know, the transports on this ABC structure, the largest one, maybe can go bounce back up to that level. But the transports have already got taken apart in an extraordinary way. So, you know, when you take a look at that aspect, that's where it is. This is so cool, this market. This is sick. So we are at, the Dow's up 137. NASDAQ is up, where are you? NASDAQ's up 52. S&Ps right now are hitting the 1933 level. And it looks like that 1940 is going to be game. You know, so this is a classic all around. There's no two ways about it. Now, what you got to watch out for is, let's just see. So right now, the trend's at 82. It'd be cool if we didn't get a big uptick. That's close. So what just happened is that we just got a plus 1330 uptick. That, you know, yeah, we got that at 320. So what that generates, the great thing is that you got a minus 1330 downtick this morning. What that generates is that, you know, when we go hit that 1940, it'll have to build some cars in order to get the higher price. But it looks to me like the earnings are going to start coming out, and whether the earnings are good or bad, this market looks like it wants to bounce anyway. That's what it comes down to. And the kick is going to be how does the bounce come in. Now, if you go over to this 10-year bond, you're going to also see that it's trading in harmony with the marketplace. The 10-year had got to 128. Now you're at 127.22. It's giving it up on price. You know, can't make the swing point once again. And it would actually have to get back underneath 127.20. There, it just did it. 127.23. We're at 127.22. You know, when you see those all come across at the same time, it's pretty cool. Let's go to Carlos in California. Carlos, what's going on, brother?
Hey, how you doing, Tom?
I'm doing great, man. Yourself?
Well, very well, thank you. Thanks to you.
Oh, you're too much, man. Thank you.
Well, Tom, when you said that this market was going to rebound, and it was practically before your show, right about when you started, I said, well, it's too far for that market to come back. And I have to apologize because
no, listen, I agree. I know. Listen, man, that's what's so great about markets. I know, even believe me, when I said, oh, man, they already know I'm crazy. I'm going to come out and say, listen, man, this is what. Well, that's why I went through what the theory was behind it also, though. You know what I mean? But I agree. Yeah. I know, man, it's crazy. Right.
Yes. Well, I have some calls in different indices, but I have the SPY calls.
Okay.
I have different expiring dates, but I have one that I want to ask you. The Morse is the one with the Morse gain today. Yeah. But the nearest one to expiration. It's actually, I'm going to give you exactly it's January. Let me see here. I think it's 2022, January 22.
Okay, and what strike price?
This is a little slow. It's getting a little slow. But the thing is this, right? I want to hold it until expiration. It's January 22. It's a weekly at 195 strike.
Okay. Okay, that's all right. That's all right. I mean, January. Oh, we're already in January, right? Oh, yeah.
Yes, it's not December no more.
It's a weekly. Yeah, not December anymore. Okay, I know. Well, you know, you can hold it for a couple more days. I mean, I suspect this thing's going to try to crawl up to 199. That's what it looks like to me. You know, you got 199, folks. It's a low of December 18th, and you have 202, which is the low of the 16th of November. And, you know, what happens is that the market's deviant enough that, you know, maybe it tries to fill the gap. But on an option play, if you get that quick, man, I would skedaddle. Yeah. Take that bread, you know.
So are you expecting a rally for at least a couple of days?
Yes. Yes.
Okay.
Yes.
Beautiful.
Yeah. Yeah. Because, see, what we had is, and this is why, when you test those lows that many times, which we did, you know, that's a good testing procedure. We tested them Thursday, Friday, today. That's a good number, and you know, it keeps coming back. You know what I mean? And there's no juice on the way down, so it's like, hey, it's time for a bounce, man.
Thank you very much, Tom. Have a nice day.
Have a great one, Carlos. Have a safe one. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to the XAU, the HUI. You're going to see both of these, folks, rejected. Lower price, bottom line, I suspect we're going to have lighter volume. The XAU broke all its lows, got down to a price point of 41.84. It's trading at 42.95 right now. And the 42 level, let me just get this, 43.18. That's what we want to see it get back inside. You know, the low was 42.73, but I want to see that 43.18, but it looks like it's going to happen. The HUI, the Gold Bugs Index, what the Gold Bugs Index did, and see, the Gold Bugs Index is stronger. This is what's really cool here, folks, is that because the Gold Bugs Index is stronger, I suspect what you have here is that, you know, the equities that are in the Gold Bugs Index, they can't sell forward more than, I believe it's 2/3 of its production. Let's see, companies above, they cannot hedge their gold production beyond 1.5 years. That's an indication, because that index is stronger than the XAU, that's an indication that the physical metal price of gold wants to get into higher price. FNV, let's go take a look at Franco-Nevada for a second. Yeah, that's a nice setup. So Franco-Nevada, that rejected lower price, has lighter volume. Wrangle Resources, that also rejected lower price in the consolidation that it's in. So it's a pretty good setup all around. We go take a look at the Chevron CVX. Let's go see what Chevron's doing. Yeah, so Chevron rejected lower price too. There's going to be we're going to get a rally here. It's not. It won't take much for these oil stocks to rally. So Chevron came down, 11 million versus 13 million. Actually, it's better than that. 11 million versus 23 million. So the Chevron came right into where it came off the bottom on August 28th. In fact, watch if I put this on a weekly. It really looks good. Interesting. So on a weekly, we're at 82.20. We got to 70. See, a benchmark is 79.69. You're already over the 81.55 on a weekly. You're into, this is a decent setup, man. This is a setup. You're going to get a bounce here. You get a bounce in the oils, of course. That'll send the S&P up, and we'll see if we get a few of these numbers come out that they can throw a little juice into the marketplace. The XLF, we take a look at the financials. Financials have been in a mess. Yeah. So the XLF, we're up 18 cents right now. We came down to 74 million. You're going up on 61. The cool thing here, folks, is that you're going to be able to go through the ETF structures. You're going to be able to go through a lot of the individual equities. And what you're going to see is that as you start moving up, if the volume contracts, bottom line is that more than likely is your B2C of an ABC structure on the way down. So Apple, let's go take a look at Apple. Yeah, Apple's already starting this ABC up. So watch this, the B2C rather. Apple hit a low, 81 million shares. Goes slightly higher yesterday with 49 million. Today does 44 million. That's exactly what you're looking for on an ABC structure on the way down. That as it climbs higher, you have lighter volume. You have less folks that want to basically get into it, but yet you can get the price higher. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back with a bunch of numbers for you. Dow up 128, NASDAQ up 52, S&P's up 18. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. A believer is an optimist who thinks of tomorrow. Duke Ellington. Market-wise, let's take a look at it out here. We had the Dow Industrials up 117, NASDAQ up 47, S&P's up 13.5, gold contract down $7, traded at $1,089 an ounce. Silver down 7 cents, $13.79 an ounce. Platinum down $7, $8.37 an ounce. Copper down $0.015 at $1.95 a pound. Light sweet crude down 58 cents, $30.82. Oil broke the $30 barrier, folks. Bottom line is at $30.82 right now. Bonds. We had the 10-year bond up 12 ticks, 127.23. 30 up a full point, 18 ticks, 157.11. King dollar up 266 ticks, 99.04. The euro is at 108, and the yen is trading at 117.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Can you say B to C of an ABC structure in the way down? That's what I suspect we have here, folks. So we take a look at the SPY. You can bring it back to the 29th of December. SPY's trading out at 207. You go down into 189, lows of yesterday. Tested those lows a few times today. Rejected them. Intraday had lighter volume. Now the bounce is on. So we did 165 million shares today. You're going to be going into a couple hundred million. What I expect you're going to see here as you start moving higher, you're going to get lighter volume each day. This bounce can get you up to 199, which was the low of December 18th, to 202. And I suspect you're going to get that bounce. As we go up, you'll see lighter volume. If that's what you get, your probability is that it's an ABC structure on the way down. And it's a very large one, by the way. You know, your A point, even if I took the gap, I can't take the top because the gap is like a swing. So that'd be 203.87 down to 189.82. So what is that? What did I say? 202, 203. So you have you have $12. If it goes into the 199, that'd be almost 200 area. If there's 200, that means the next leg down will bring you 200 to 12, 190, 188. 188 would bring you back into the swing point from September 29th. NDX 100, same type of setup in the NDX 100. We take a look at the Qs. What you have with the Qs is this. The Qs, 3 Qs are trading at 105.54. You've done 46 million shares. That little baby can bounce up into the 109.38 area. Gold contract. What do we have with gold? They want to whack gold all over the place. Bottom line, they couldn't handle it. Gold had a price spread today of $1,099 to $1,083. We did 159,000 contracts. You're going into 192,000 contracts as well as 217. Gold still wants higher price. Silver needs help. There's no two ways about that, man. Silver needs some help. Silver is much more volatile than gold. There's no two ways about that. So we'll see whether silver can get off this bottom. What you had out here today, there was no sellers in the silver market today. The price spread was very minimal. You had the price spread out here from 1373 to 1391. You only did 37,000 contracts. So that's really light contract volume in the silver contract, particularly in the silver contract as that baby is coming into lows. That's a big heads up. There's no two ways about that. We take a look at the oil. So oil today breaks $30, gets down to $29.93. Has volume behind the move. The ABC structure on the way down is 28.25. So we'll see whether it's going to come into that level. What you had intraday out here today, which was pretty cool, is that at 2 o'clock, the oil contract was breaking 30. As that was breaking 30, you had the S&Ps testing the signs of strength intraday that we had yesterday as we come off the bottom. That was the low that was established out here today. So it was really cool how that shook out. That shook out at 220 today. Those E-minis had 42,000 contracts. Well, the 42,000 was coming into how we went higher at 330. We're going into 95,000. So big numbers, folks, okay? It rejected it. Now what you have out here, you have 2 separate high volume swing highs, which is really cool, because the way this is shaking out now is that at 9:40 this morning, you have a high volume swing high in the E-minis, 1940. That's the high. 96,000 contracts. Well, now we have a second one and the second one was at 1550 hours, 10 of 4 at 1933. That brings your probability much higher that guess what? This market, the bounce is on. Bonds. Okay, now this is where it gets a little tricky. We take a look at the bond market, and what you're going to see, the 10-year had 1.3 million contracts. We closed over the swing of 127.10. You're into the downdraft that had been created out here on the 28th of October. The high of that is 128.16. You know, we'll see whether it can make it up there. Right now, you're at 127.23. If you take a look at the TLT, which is the 20-year bond fund ETF, that failed. That went after the swing point from December 11th, which was 124.10. That's 124.32. Did 12 million. Oh, interesting. Hold on, the volume accelerated here. Oh, this is interesting. Okay, so check this out. We did 12.3 million, and that's 12.3 million there too. That's saying that's saying that that's going to get tested again. 123, 124.32. Now a lot of volume came in there at the end of the day because at 3:30 the volume was shot by about 3 million shares. So that got some juice at the end of the day. King dollar. What do you have with King dollar? King dollar can't get out of its way. King dollar is at a price point of 99.02 rather. That is coming into the downdraft that had been created out there on December 3rd. December 3rd, the index went from 100.7 down to 97.70 and did come down with fast acceleration. After the close out here, let's go see. Let's see. CSX. We have a lot of numbers coming out. CSX closed at 23.70. That's trading at 23.16. Those transports, folks, it's a one-way trade. Down. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 117. NASDAQ up 47. S&P's up 10.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 117, Nasdaq up 47, S&Ps were up 10.5. And as we do each and every Tuesday, we get our man, Mr. Andy Heck. And don't forget, folks, every trading day at TFNN, we have a new schedule for 2016. Monday, Wednesday, Friday, we go live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday and Thursday, 7 o'clock in the morning to 6 in the afternoon. Andy's got an outstanding show right after me every Tuesday and Thursday. Now, no matter where you are in the world right now, if you're driving in your car, you're in California, Colorado, Boston, the Cape, wherever you are, remember that you can get us right on your cell phone, TFNN.com. Hit TFNN.com, just hit Watch Tiger TV. Even if you're in the car, folks, you don't have to watch the TV. The audio portion can go. If you just want audio, just hit TFNN.com. And, of course, don't forget, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, Andy's got a great show. Also has a great newsletter. It's the Technomento Commodity Report. You can come over to our website at TFNN, test drive it right now. You go to TFNN, go to newsletters, trading newsletters. Andy Heck, what's going on?
Hey, Tom, how are you?
How you doing, man?
I'm doing good.
So,
crazy markets, huh?
Yeah, you get some nice volatility in the markets. There's no doubt about it, man.
That is for sure. So we had the stocks up today, but commodities continue ugly. We got a 20 handle for a little bit in crude today.
Yeah.
We've got copper comfortably below the $2 level.
Yes.
We actually had heating oil below $1.
Really?
Heating oil went below $1. It's actually right now, it's 99 3/4 cents per gallon wholesale on the February contract.
That is so cool for all you folks up north, folks, and out west. Man, that's
they don't need it though. It's warm.
Oh, it's not warm now, man.
No, I know. It's chilled up a little. But it's not. It was a warm start. But I looked at the temperatures today. We're in the upper 20s, low 30s, and yeah, you need heating oil. But
look at that.
We don't see those teens and those single-digit temperatures.
Yeah, well, it's just the beginning. Look at that. It's a mind blower, man.
I know.
Folks, up north, go fill up those 200-gallon tanks right now.
Exactly. Hey, that's what I want to talk about here. Look, crude oil. One thing, everything in crude oil says lower. The contango, the term structure, the processing spreads, the products. There's not a lot. The world's awash in crude. The bottom line is there's a lot of it around. However, price action. In March, we got down to $42. All of a sudden, we bounced ferociously, even though the fundamentals were still bad, to above 60. In August, we got down to 37.75. Again, fundamentals remain bearish. Everything was like it is today. We bounced aggressively to just above $50. Today, we put in an important level. We traded below $30. Now, I think we can go a lot lower. The fund. I'm looking at contango that's over 30% here. Everything's pointing that way. But I am cautious here in crude because of what happened in March and what happened in August with these relief rallies. So, we just have to be very cautious. And eventually, you're going to get a round of short covering in this crude market that's going to blow people's heads.
Yeah, so I just did the percentage move. So the first bounce, if you take the bounce from March, it was a 23% bounce. You take the bounce from August, there was a 50% bounce.
By the way, the bounce in March took till May. The bounce in August took about 2 weeks.
Yeah, right.
So, it was ferocious. So, hey, we'll have to wait and see. It's certainly a case of lower lows and lower highs. But could it go back to $40 and then go down again? Anything's possible in this insane market, So we just have to be cautious. It's kind of not a no-brainer short here, certainly. Everything will eventually have a recovery. I mean, we've opened 2015 very ugly on this commodity side, just in general.
What's interesting is that I heard this. This is a fund manager that was on today, and evidently he owns a lot of oil stocks. And, they were asking about, the price of oil, and he was saying that, hey, listen, the shale oil in the United States, I guess the wells go down, they strip down very quickly. And he was thinking that we're comfortable with like $50 to $60 oil. And I'm listening to this, I'm saying to myself, I think he's dreaming. I mean,
$50 to $60 oil, they got to sell, and plus that oil is trading at a discount to the WTI.
Yeah, right.
So they need like 3 barrels to get that.
Yeah,
to get that price.
Right. and yeah, I mean, so hey, we'll see where this.
See where it shakes out, right?
Yeah, there's going to be there's a lot of blood in the streets right now, but there's going to be a lot more, evidently.
No question, and it'll affect the equity markets. The very quietly today, we not without a lot of hoopla, the U.S. Department of Agriculture released their World Agricultural Supply and Demand Estimates report.
Okay.
And we had some strength in the grains. I mean, they've been created, but we had a key reversal on the daily chart in the soybean market.
In the beans. Okay, let's go over to the beans. Let's take a look at this. I saw wheat move too. Yeah.
Yeah, wheat moved up. About 480 or so.
Yep, 481. So beans.
Yeah. Beans, we made a lower low, marginal lower low. We closed above yesterday's highs. Actually, we closed above the highs of the last couple of days.
Yeah.
So, there should be some follow-through strength in that market. This is the only thing I will point out. This is a time of year. The WASDEs are really important during growing season and harvest and all that. In January, kind of where it's kind of an inventory report.
Okay.
So it's not as important as it would be, when we're planting, when we're growing, and when we're harvesting. So, we're kind of in no man's land. I mean, it's always important for wheat because wheat is grown around the world, and we have Australian crops and European crops. We have winter wheat, but we have some South American crops in Brazil and so on and so forth, and in Paraguay and other places down south of the border. But a little bit of a positive thing. It's kind of the only positive thing going on in commodities today. I'm kind of looking around, and there's not too much black on the screen. It's all very red.
Well, when you look at this, so natural gas, I like how that's pulling back. Okay, so when you look at let's say the food commodities, right? We know that there's more people in the world every day. We know that they hope to be eaten, right?
Oh, well, yes. They have to be eaten.
Yeah. So I guess at some certain point, the food stocks, bottom line is that they're going to move.
Right. And our man Sal Gilberti, whenever he comes on, he always, talks about the fact that, the demographics, are supportive of higher lows for these grains. Certainly, production cost is pretty close to where we are now for the 3 major grains. But the lower energy cost, we have to remember, lowers production cost across the board for all commodities, and it lowers the bar for selling. So as long as oil and gas are, under pressure, then that's something that
I guess another way to look at it too.
Price.
Hey, let me ask you Brazil. Let's talk Brazil, right?
Sure.
So Brazil, their pesos got killed, but yet when they're selling their commodities, they're selling them in U.S. dollars, right?
Well, yeah, and then but their labor costs are in local currency,
which is great.
Which means that they can sell more. I mean, the price can go lower. There's another interesting divergence.
We'll talk about that. That's awesome.
Sure.
Okay. Andy Heck, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Dow finished up 100 and, where is she? 117. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and we're talking with our man, Mr. Andy Heck. We are talking commodities. Let me just go through a couple numbers here. You just had MetLife come out with their numbers. MetLife closed at $41.99. It's trading at $45.69. As our man Andy Heck had said, insurance is the greatest business in the world. And, man, that's a fact, huh?
It is, man. Just collect those premiums.
Well, it's wild, folks, okay? Let's go through one more number. You get Yum Brands out. Yum Brands closed at $69.57. That's trading at $71.94. And there's no doubt, if you go back to the insurance business for a second, if you're, just starting out your career, folks, bottom line, insurance business is... Those insurance men or women, they're always on the golf course. So it's a great business, man. And
it is.
And it's an annuity type of business that, over and over again, after you sold policies, you are getting. And, I'm a believer in insurance. That's, so
am I.
Yeah.
By the way, even the mob knows it's a good business because protection is basically insurance, right?
Even the what?
The mob.
Yeah. No, that's exactly. That's right.
And it's one of their key businesses, right? Through history.
I guess so, yeah.
It is a great business. I mean, that's a joke. But I'm just saying, this is a business that makes money in good markets, in bad markets. They just print money.
They always own the biggest buildings in just about every city.
And as Duffy says, they raise their rates every year.
They do, man. They do.
So I want to show you something really cool.
Okay.
All right, I have a chart up here, which is the price of crude oil divided by the price of natural gas. And this is a long-term chart. This is a monthly. And you can see that we had a huge divergence between the price of these two commodities, these energy commodities, back in between 2010 and 2013. And we're coming back now down with lower crude oil to long-term norms. And this just feeds into, I always love to talk about inter-commodity spreads, the value of one commodity versus the value of another commodity, and understanding true value. And here's another example of a market that really extended for a long period of time, but is now coming back to a historical norm in terms of the price relationship, one commodity versus another. So, it's the kind of thing that we have to look at. When one commodity can be replaced with another commodity. We talk about platinum versus gold all the time. Platinum gold is trading at 251 discount platinum under gold today.
I know.
That's insane, Tom.
It is insane.
That is insane, because you and I both know, and our listeners know, because we've told them 1,000 times, the production price of platinum is much higher than gold.
It is. And,
it's more
folks,
than 10 times rarer.
It's unbelievable. And, if you are looking for just platinum bars, don't forget that Everbank has them. You can give them a call, 855-750-4051. It's 855-750-4051. And, I don't think, since 2001 that platinum has been under gold for this longer period.
No, it hasn't. I mean, I looked this morning when I was doing research for the show. It has not been over gold since a few days in January last year. So we're now at a year that it is under the price of gold. And here's the long-term chart on this. And you could see, platinum traded. You remember back in 2008, platinum was $1,200 over the price of gold?
Yeah. I'm putting both of them up right now. Look at this.
Yeah, it's a crazy, this is an all-time low. So we're having divergence here. Now, so like on the oil versus natural gas spread, it took a long time to work itself out. But if you're patient, these trades tend to revert to the mean. And a lot of professional traders out there look at these things. They always, hedge fund means you're long one thing, you're short another thing. And a lot of times they got shorts against their longs, and they're just looking for reversions to the mean. So with this wild commodity market, we're seeing a lot of divergence. And we're also seeing some divergences come back. There's another divergence in the cattle versus hog prices here. Cattle are very expensive relative to the price of hogs. So to determine true value on a long-term basis, we have to look at different, what can be substituted for what. And take that into account in our trading.
Yeah, there's no doubt. If you just go back to this platinum chart, if you're watching Tiger TV, folks, I have the green line is gold, and the white line is platinum, and you'll see, I got this back, I can put it back further than this, but I got back to 2012 right now. Platinum is dramatically over gold. And then...
I have my chart. If you put my chart up front, I have it back to 1980 here.
Yeah.
It's like... It's just unbelievable how low it is historically now, and it's a comment on the global economy. Certainly, look.
What I can't figure out though? What I'm trying to figure out is that platinum is used, of course, in cars in a huge way.
Right.
They've sold more cars than they've ever sold last year. It's like, okay, so what's the problem here?
Well, there's a couple of problems. It comes out of South Africa and Russia, two countries that are certainly suffering with the global economy. Russia also suffering with sanctions, with low oil prices, with a whole slew of things, and South Africa with low mineral prices. It is possible that some government stockpiles have been liquidated, just to raise cash.
Okay.
That is possible here. I don't think that that's overwhelming. The other thing is, I think that what's happening in markets that make lower lows and lower highs, very often funds come in and they say, "Ooh, I want to buy this low," and then it doesn't go up, and then they spit it out. So you get big pockets of selling. We saw a big down move in platinum yesterday, and I thought it was fund liquidation at the beginning of the year, some stale position from last year.
Yeah, right.
That happens
Or
a
a
lot.
position they put on, it didn't go there, and it says, I'm getting out quick. I don't want to be down again.
Clear the decks. It's a new year. Yeah, let's just take a look at yesterday's chart.
Well, here, let's talk a little bit, because you know what you do have out here also, folks. I was talking about this last week, Andy, is that there are so many funds that have closed down.
Oh, yeah, that's right. And then you clear all the decks.
And then they're liquidating. And folks, they're going to open back up. They close down because they're hedge funds. They get into a losing position of 10, 11%. They're going to make that back before they make any money, so they just close it. And
Hey, here's the evidence, Tom. On December 10th, open interest in platinum futures, 77,000.
Okay.
Today, open interest in platinum futures are 68. So you had liquidation.
Yeah.
You're having liquidation. You could see on this graph, on the second graph here,
yes,
you have a big downward slope, and that means that long and short positions were closed out. And believe me, these there might have been some shorts, but platinum is so thin and illiquid, people are very cautious on the short side in that commodity.
Yeah. No.
You're more likely to see longs.
Right, no doubt. Amazing, man. I'm telling you.
It's amazing.
And well, you know what's amazing too is that you hear plenty of analysts, whether it's on CNBC or Bloomberg, they're blaming the dollar, but the dollar hasn't moved, man.
The dollar's not going anywhere.
Right.
The dollar's sitting close to the highs.
The dollar hasn't moved, so it's like, okay.
That's a load of hooey.
Yeah.
I don't buy it.
No.
By the way, if the dollar spikes up to 104, 105, then you could blame the dollar if commodities head down again. Right now, commodities are on their own. They're reflecting China, and they're reflecting what's going on, in the world. And they're also reflecting, it's a vicious cycle, as I said before.
Yeah.
Lower energy means lower production costs, means producers can sell more.
Yeah, and that's the kicker, right?
I think that's really what's going on across the board in commodities.
Pretty amazing. Well, listen, we look forward to the show in all of 22 minutes, man.
Thanks so much. I'll see you next time.
Have a great one, man. Have a safe one. You stay right there. Andy's going to be coming back with you in 22 minutes, folks. 5 to 6 Eastern Standard Time. Remember, you can get it right on your cell phone, TFNN.com. Just go to Tiger TV. Coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We take a look at some of the higher volume stocks in this market. You had Ford up 8 cents. Williams, the pipeline, that would get smoked. That was down to $2. You had Apple up $1.40. Facebook was up 186. Take a look at some of the Dow stocks out here. What you had, Citigroup was up 3 cents. ExxonMobil was up 151. Walmart gave back 60 cents. Big Blue is down 33. After the close out here, CSX. Let's see what these the rails have to say first. So CSX closed at $23.70. It's trading at $23.18. This has been on a one-way trip down, and this is, of course, all about commodities and the fracking business. This has been a one-way trip from $37 down to $23. You get volume down at those levels, wants lower price. So let's see what they say. The earnings per share, the estimate was 48 cents, and the estimate was 46, and they made 48. They supposedly made more. They see their 2016 earnings per share down versus 2015, and 2015 was bad enough. The revenue, the fourth quarter revenue, was $2.7 billion. The estimate was 2.8. Their operating income taken down to the bottom line, the estimate was $825 million. They took to the bottom line $791. The profits declining 5%. They beat their forecast. Lower freight volumes in a big way. So what you do have is that the rails, folks, have got hit a couple different ways. The first way, of course, is that just commodity prices are lower in general. The largest one, I suspect, I haven't read their financials, but I suspect the largest one is where the rails had it going in a huge way for a long period of time, is that they were taking fracking sand into the Northwest. They were bringing oil out of the Northwest. That was a huge business because most of the time, rails are a one-way trip. They had it both ways. Yum Brands. Yum closed at $69.57. That's trading at $71.69. This has been also on a one-way trip down. The high in Yum was $95. That was established in May of 2015. Right now, you're at $69. Let's see what they have to say. This is going to be more than likely about China, because China's whacked them both ways. So Yum Brands, their sales rose 2%. Same store sales rose 1%. Kentucky Fried Chicken, their sales rose 5%. Same store sales rose 5%. I know that's pretty amazing. Pizza Hut, that was down 11%. That's a big number. That's a big number. December comps. One second. This was in China. So in China, KFC went up 5% in their stores. Pizza went down 11%. The year-over-year stores combined in China did go up 1%. Okay, let me see. So let's go to MetLife. MetLife closed at $41.99. That's trading at $45 right now. All of these have been in vicious downdrafts too. MetLife. Okay, so MetLife is trading where it was trading, pretty amazing, in 08. MetLife's at $41. The high that was generated was 58. That was in June of 2015. Can't seem to get out of its way. They still must have some bad investments hanging out there somewhere. They plan on splitting their retail operations. Let's see. New move would represent 20% of their operating earnings. Okay, MetLife, the largest U.S. insurer, plans to separate much of the retail business in the country as chief executive officer works to shrink the company to limit federal oversight. The insurer is weighing a possible sale, spinoff, or public offering of its operation. New York-based MetLife said Tuesday the new company would have approximately $240 billion of assets and accounts for approximately 20% of MetLife's operating earnings. MetLife joins General Electric finance unit in seeking to simplify operations after being designated by the United States panel as a non-bank, schematically important financial institution. So one of the tigers in the den, when Andy and I were talking about the insurance is a great business, was talking about correctly that AIG, okay, didn't like the insurance business that we bailed out AIG. No doubt. And now check this out. This is where when the bailouts were done, whether it's AIG, and this would kill GE also, what they were doing, folks, is this. And this is how, but you know what's amazing? And I'm not sure whether they teach this at Harvard or MIT or, all these business schools or what. Financial engineering, that's exactly what it is, financial engineering. And the financial engineering inside markets in general are as creative as the person can get creative and as the person or persons can sell. That's how this works. So check this out. This is wild when you think about it. So what both of those companies had done, and other companies, by the way, is that when credit was loose in a huge way, right? Let's picture that all of us own XYZ company right now. An XYZ company, is a decent company. Let's say we have sales like of $10 million. Sales of $10 million, and we're bringing maybe like $400,000 to the bottom line. Okay, so you got enough that someone that's raising money will pay attention to you. You get 10 million in sales, you get 400K to the bottom line. Well, what was going on is that if we had something like that, and let's say we had that going like for 3 years, well, that's enough of a cash flow that you can get a few banks' attention. What you won't get, though, is you won't get money because they don't want your signature. They want a AAA signature. That's what they're looking for. What also happens is that it's much easier for the banking community and the broker-dealer community to sell the bonds, meaning as debt, out. And what happened starting in like 2004, 2005, is that GE, AIG were the co-signers for just hundreds of companies. And the way it worked is that you would pay up for that deal. And everyone thought everything was just so great that bottom line, no problem. And the way that was put together was this. It was actually put together by the banks. So the banks, knew that GE would sign for a certain amount of money once they looked at financials themselves. Then GE figured out, like, hold it. I'm in this business. Why am I going to sign at all? I'll sign, but guess what? I'm going to get that. I'm going to get the banking deal, and I'll sign the deal. And what they were doing is that you had the banking structure here. You had the signing structure for their AAA rating over here. So they were signing and their subsidy, and they were using their own AAA rating to push it out and making money like that. That's why you saw one of the collapses in a huge way. Now, what MetLife is doing, they're splitting off. GE had to split off because guess what? That was the biggest game of checkers in the world. Huge. Huge. Dominoes, rather. And dominoes fell. Slam. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Let's go over to the transports. You know, we just had CSX come out. Bottom line, they still can't get any juice going. If we take a look at these transports, the Dow Jones transports, what you're going to see is that we bring these back. I'll bring them back 15 years. You're going to see that the high was generated out here in November of 2014. So, you know, bottom line, long period of time ago, right? Well, what you want to wrap your head around in a large way is this, folks. The way that our markets went up, all the indices, the sectors, it was a one-way trip. You know, starting in looking at the transports, I won't start in 2009 because it went from 2009 for sure. But the largest leg, or a leg just as large from 2009 to 2011, started in January of 2011. The transport started up at 5,300, got all the way up to 9,300. There's nothing stopping them on the way down. This is, you know, that concept there, that's your next floor. They had built a beautiful floor at the 5,500. It took them years in order to break it. The 5,500 was done in August of 08. It came back up there again in 011, and then finally broke it in 13. You know, you can expect that baby to come all the way back down into that level. And that in itself is just a monster problem. Now, when we go back over to the S&Ps and you take a look at the S&Ps, you know, what you're going to see is not much difference. The S&Ps, the leg up in the S&Ps, when we took out those 2008 highs, that leg, you know, 1450, 1400, you know, that baby, 1530, 1530 was the high, 1530 to 1570 was 2007. We went up there, and if you, whether you're in your car, you're going home, you know, pull these up later tonight, over the weekend, what you're going to see is that the highs themselves are on air. That being said, each and every time that you've come down, including the first time down, which was October of 2014, you have monster volume. This baby is building cars in order to break through the 1820 S&P number. You break through the 1820, you're going to be at 1570. And you don't want to be at 1570, folks, if you happen to be in a lot of funds, a lot of anything. That's what it comes down to. Because just if you go back and look at that again, what you're going to see, and this is the sick part about this, if in fact that happens, let me pull this back, what you're going to see is that you're going to be in the same place you were in 2000. That's what this gets so sick. We're in 2016, you know. So when you take a look at that, it's like, oh, really? 16 years later, and we're at the same place? Well, I suspect that's what we're going to get. And the wild thing is here, you can see that, you know, they say that, yeah, you never should sell. But it's like, you got to be kidding me. When you go back to, whether it's 1994, you can see the runs that are extraordinary. 1994, the S&P is at 440. 2000, you're at 1550. I won't forget the downdrafts, but I'll start at the next downdraft. And 2002, your S&P is at 768. You go up to 1500. That's a double. That's still not enough? Well, guess what? If you don't take it, you don't get it anymore. Next one was the largest one yet. 666 up to 2100. So, you know, you can see the first one was a double, I believe, right? No, the first one was a triple too. The first one is 442 to 1500, 4812. That's 3.5. And you know what? Check that out. The first one was almost 350%, and this one's almost 350%. 61218. It is. Same type of number. Bottom line, folks, when you get nice profits like that, take them. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership and fly with it. Thanks for being here, folks. Stay right there, man. Mr. Andy Hex coming up next. Go get him, folks.